What if I told you that football betting isn't about luck? That hidden inside every match are patterns, repeatable behaviors that the bookmakers don't want you to notice. The Winning Edge 75 trademark system is built on one truth. Football is more predictable than you think if you know what to look for. This book is designed to sharpen your betting intelligence and give you a structured edge in football analysis. Together, we'll explore the principles, metrics, and strategies that make up the Winning Edge system. Please note, all illustrations, figures, tracking sheets, and templates can only be found in the official ebook. In this audiobook, I'll explain their purpose, but if you want to see or use them, you'll need the ebook or the companion workbook. Before we begin, remember that everything you'll hear is for educational purposes only. This is not financial advice, and Paradigm Bets cannot be held responsible for how you apply these ideas. Always manage your risk carefully and bet responsibly. Now, let's begin our journey into Part 1. Foundations of Strategic Betting. In this part, we'll cover the 5 chapters that lay the groundwork for the entire Winning Edge 75 system. We'll begin with the psychology of a strategic bettor, then explore how to see the betting market as an ecosystem. From there, we'll uncover why percentages matter more than form, understand the 75% principle, and finally, master the repeating behavior principle. Let's begin with Chapter 1. Chapter 1. The Psychology of a Strategic Bettor. Betting is 90% mental. Most casual punters think betting is about finding the right team or having inside knowledge. But seasoned strategic bettors know the truth. Long-term success is won in the mind, not in the market. The ability to stay emotionally neutral, disciplined, and grounded in logic is what separates the winners from the losers. This chapter introduces you to the core psychological principles behind strategic betting. These principles are what keep you from chasing losses, overbetting, or abandoning a winning method when things get tough. Key psychological traits of a strategic bettor. 1. Discipline over emotion. Strategic bettors understand that no matter how certain a match looks, there are no guaranteed outcomes. They don't let emotion guide stake sizing or game selection. They follow a tested system with defined rules. Win or lose. The disciplined bettor knows that a good bet can still lose, and a bad bet can still win. It's the process, not the result, that matters. 2. Delayed gratification. Winning consistently in betting often means sacrificing short-term highs for long-term returns. Strategic bettors resist impulsive bets, betting only when the data gives them a real edge, even if that means sitting out a weekend entirely. 3. Emotional resilience. Losses are inevitable, but emotional bettors tilt, chasing losses with reckless bets. The strategic bettor remains calm and focused, understanding that variance is part of the process and that discipline wins over time. 4. Realistic expectations. They don't expect to double their money weekly. They understand this is a low-margin game and success is measured in percentages. 5%, 10%, even 15% ROI over hundreds of bets is elite. Strategic thinking versus gambler's fallacy. The average bettor falls for traps like, they've lost 5 in a row, they're due a win. I feel like this team will win. It's a derby, so form doesn't matter. The strategic bettor uses data, not hope, intuition, or superstition. Every bet must have a quantifiable edge, or it's past. Common biases and the strategic response recency bias. Overvaluing recent results. Response: trust long-term metrics, confirmation bias. Looking for info that supports a hunch. Response: challenge your assumptions. Sunk cost fallacy, chasing because of past losses. Response: detach from past outcomes. Full table is available in the ebook. Establishing a mental betting framework. Strategic bettors build their betting around processes, not emotions. Here's a practical mental checklist before every bet. Is this bet supported by data or just a feeling? Does it align with my system or strategy? Am I okay with losing this stake emotionally and financially? If I had just lost 5 bets in a row, would I still make this one? Managing decision fatigue during losing streaks. Mental exhaustion can sabotage even the most disciplined betting strategy. When you're fatigued, you're more likely to chase losses emotionally, skip data checks, miscalculate stake sizing, doubt your own system. To protect yourself from burnout, implement cognitive load controls. Checklist for mental load management. Limit daily bet volume, e.g., max 3 to 5 bets. Preset betting times or windows. Avoid 24/7 scanning. Use a prepared checklist before confirming a bet. Step away after major wins, losses to reset. Automate filters via spreadsheet or app. Let the data narrow your selections. Tip: treat your mental energy like your bankroll. Preserve it so you can execute consistently over time. Real-world example: the unshakable bettor. John is a bettor using the 75% method, betting only on teams with 75% plus success in a specific metric over the last 12 games. One weekend, all 3 of his bets lose. Most punters would panic and question the system, but John doesn't flinch. He knows that edge plays out over volume. 3 or 4 bets don't define the system. Over 200 plus bets, that 75% metric gives him a sustainable edge. He sticks to the plan, and over time, his profits reflect that discipline. Key takeaways. Emotions are the biggest enemy in betting. Discipline is your weapon. Strategic betting is a process-driven craft, not a guessing game. Losses don't always mean mistakes, and wins don't always mean smart bets. Think in long-term ROI, not short-term streaks. Chapter summary. Build the mindset first. Discipline controls stake size, reduces tilt. Patience avoids overbetting and emotional bets. Emotional control keeps strategy intact through variance. Data trust builds confidence in your system. End of chapter. Chapter 2. Understanding the betting market as an ecosystem. Most bettors treat odds as fixed truths, like prices in a store. But the betting market is far more dynamic. It's a living ecosystem, where odds fluctuate based on money, momentum, algorithms, and public perception. To gain a long-term edge, a strategic bettor must understand how markets work, where prices come from, and what moves them. This chapter explores the forces behind the odds and how understanding them transforms you from a follower into a predator in the ecosystem. What exactly is a betting market? A betting market is a place where bookmakers and bettors interact. Bookmakers set initial odds based on historical data, power ratings, injuries, and team news, expected betting behavior from the public. These odds then move depending on how money comes in. It's a marketplace like the stock exchange, where odds reflect perceived probabilities and where the price changes with supply and demand. Types of bookmakers: traditional versus exchange. Understanding where you're placing your bets is just as important as understanding what you're betting on. Different bookmaker platforms behave differently, especially when it comes to odds movement and how they handle sharp action. In the ebook, you'll find a full comparison table of traditional versus exchange bookmakers. Here are the key differences to note. Traditional bookmakers control odds and build margins into prices. Exchanges act as marketplaces. Bettors trade directly with each other. Sharp money impacts exchange odds almost instantly, while traditional books often delay reactions unless liquidity shifts dramatically. Tip: watch exchange markets for sharp movements. They are often the earliest warning signs of informed betting. How odds move and why it matters. Odds aren't just numbers, they are signals. Understanding these signals tells you where the public is betting, how confident the market is, whether a price has value or not. Examples of triggers. Heavy betting on one side makes bookmakers shift odds to balance risk. Late injury news forces a price drop or rise. Smart or sharp bettors can cause sudden moves even without news. Herd mentality when casual bettors follow hype or media trends. The strategic bettor always asks, is this movement justified by data? Or is it emotional noise I can exploit? Understanding value. You don't win by simply picking winners. You win by finding value. A value bet exists when your probability assessment is higher than the implied probability of the odds. The math behind value. Step 1. Convert odds to implied probability. Formula. Implied probability. Percent. 1. Decimal odds. Times 100. Step 2. Compare to your edge. Value exists when your probability, implied probability. Example, odds of 2.5 imply a 40% chance. Your data shows a 50% chance. Result, value bet. Critical nuance. Value is contextual. Fixed rules like BTTS above 1.8 is always value are misleading. True value depends on league scoring patterns, market efficiency, historical odds ranges. In the ebook, you'll find league-specific value benchmarks for markets such as BTTS and over 2.5 goals. I'll summarize 1. In Italy's Serie A, BTTS odds between 1.70 and 2.2 are typical. In the Dutch Eredivisie, BTTS odds between 1.45 and 1.75 are the norm. If you see 1.85 or higher, it's rarely true value. These ranges help you avoid hype and focus on context. Bookmakers versus bettors, who really wins? Bookmakers don't try to predict outcomes. Their goal is to balance books and take commission, known as the VIG or margin. That's why they move prices based on betting flow, limit or ban sharp winners, profit mainly from recreational bettors who chase hype and overbet favorites. Strategic bettors survive because they only bet when they have an edge, accept variance without chasing, exploit inefficiencies over time instead of trying to beat the bookie every week. Reading the market. Like a pro, a strategic bettor uses odds movement as intelligence. Here are a few scenarios. Sudden drop in odds. Sharp money entering. Time to reassess. Late odds drift. Could indicate leaked lineup news. Flat odds despite major news. Market skepticism. May offer contrarian value. Public flooding a favorite. Sometimes an opportunity to fade if your data disagrees. Tip: combine market data with your metric-based system to filter false signals and confirm true value. A real-world parallel. Stock traders versus gamblers. The gambler bets with emotion, gut, and hope. The stock trader uses indicators, risk management, and long-term strategies. The betting ecosystem rewards bettors who think like traders, those who understand price versus value, accept losses as part of the process, constantly weigh risk versus return. Tools for market awareness. Strategic bettors often use odds comparison sites like Odds Portal or Bet Explorer, line movement trackers, closing line value analysis, asking, did your bet beat the final odds? Indicators showing the percentage of bets and money where available. Remember, the edge isn't always in what you bet, it's in when and why you bet. Key takeaways. The betting market is a dynamic ecosystem shaped by money, information, and perception. Strategic bettors read odds like traders read charts. Odds are not predictions, they are prices. And prices can be wrong. Success comes from identifying mispriced outcomes using data, not hype. Chapter summary. Become the predator, not the prey. Think like a trader. Use logic and data to evaluate odds. Look for value, not just winners, but overpriced odds. Understand movement. Know what drives changes and why they matter. Ignore the noise. Stick to your system, not public trends. By understanding the ecosystem, you position yourself as a predator, not just another fish in the sea of losing bettors. End of chapter. Chapter 3. Why percentages matter more than form. The betting industry loves the word form. It's used in pre-match analysis, social media debates, and commentary hype. But let's break this down. What does form actually mean? In most cases, form refers to a team's last 3 to 5 matches, whether they won, drew, or lost. Sometimes it includes vague ideas, like momentum or confidence. While useful for casual fans, form is limited, emotional, and dangerously misleading in betting. Why? Because form ignores context. Who were the opponents? Were the matches home or away? Were key players missing? Did results come from penalties or fluke late goals? Form can deceive. A team may have won 4 in a row, but against weak opposition, or in games where they barely created chances. Betting on form alone often leads to overpriced odds and poor decisions. Why percentages give you an edge? Percentages deal with quantified behaviors over a meaningful sample of matches. They eliminate noise and focus on repeatable patterns. Example, Team A scored in 10 of their last 12 matches. That's 83%. Team B failed to keep a clean sheet in 9 of 12. That's 75%. This says far more than Team A is in good form. It shows what behavior occurred, how often it occurred, how reliable the trend is. That's predictive thinking, not reactive analysis. Percentage thinking. Predictable results. When you shift from chasing form to analyzing percentages, everything changes. You stop reacting emotionally and start thinking strategically. Uni 2. Here's what happens. You become a systematic thinker, not an emotional gambler. You uncover value bets the crowd misses. You filter out low-probability matches that don't meet your threshold. You build long-term consistency, not short-lived streaks. Professional bettors don't rely on gut feelings. They rely on volume and edge. Over 100 bets. You don't need to win them all. You just need to consistently back the ones where the numbers work in your favor. Form versus percentage-based thinking. In the ebook, you'll see a table comparing form-based thinking and percentage-based thinking. Here's the summary. Form. Reactive, emotional, streak-based. Prone to bias and overpriced odds. Percentages. Measurable. Repeatable. Grounded in trends. Objective and value-driven. Betting isn't about predicting what might happen. It's about identifying what's likely to repeat. Real data in action. Hype versus statistical performance. The difference between winning and losing in sports betting isn't luck. It's data. Many bettors chase hype. A team wins 4-2, and suddenly the market jumps on them to score again. But unless that performance is part of a repeatable trend, it's just noise. Example 1. Betting on hype Venezuela league trap. From the Winning Edge 75 software, a scan of Venezuela's Primera División flagged teams around the over 3.5 goals market. What looked like high-scoring sides 4-3, 3-2 results collapsed under real analysis. Long-term trend. Only 16% to 25% of games hit over 3.5. That means just 2 or 3 matches in every 12. If you bet based on surface excitement, you'd have lost 8 to 10 out of 12 bets. Why? Because you chased hype, not behavior. Example 2. Betting with statistical performance. The same software scan across MLS, Peru Primera, and Venezuela Primera highlighted BTTS win, draw, home. Here's what stood out. Teams tracked over 12 matches. At least 10 of 12 hit the metric. That's 83% or higher. At least one of the last 2 matches also hit, proving the trend was active. This wasn't guesswork. These were high-confidence, data-backed opportunities. Why this contrast matters. Betting on hype is gambling. It means relying on headlines, one standout match, emotional fan chatter. Result? Inconsistent outcomes. Drained bankroll. Betting with data is strategy. It means using 12-match trends, applying filters, trusting the 75% edge threshold. Result: consistency, bankroll protection, and long-term growth. How to use the software. Like a pro. Step 1. Track long-term trends. Use the 12-match rule. Only bet if a team hits a metric in 9 out of 12 or more. Key takeaways. Form is temporary percentages. Reveal truth. Focus on metrics, not mood. 75% is your baseline for confident bets. Skip hunches, trust repeatable patterns. Over time, percentages compound into profit. Chapter summary. Forget hype. Follow probability. Betting should feel like research, not roulette. Every trend above 75%. Green light. Anything below. Noise. You're not chasing momentum. You're tracking behavior. You're not guessing, you're executing with clarity. Next time you hear, "They've been on fire," pause and ask, how often? In what context? Is it repeatable? That mindset shift is what separates hobbyists from professionals. In this system, 75% is not a ceiling, it's the starting point. Whether it's goals, corners, BTTS, or clean sheets, everything runs through probability. And when you combine this with strong risk management, a disciplined betting structure, and behavioral tracking, you move from hopeful punts to probability-powered execution. This is your winning edge. Clarity, consistency, confidence. Forget hype. Now forget form. What follow the percentages? End of chapter. Chapter 4. The 75% Principle. Identifying predictable behavior. In the unpredictable world of soccer betting, consistency is the ultimate edge. While most bettors chase wins, headlines, or recent form, sharp bettors look for behavior patterns that repeat with a high degree of certainty. The 75% Principle is the heartbeat of the Winning Edge 75 system. It tells us that when a team consistently demonstrates a behavior in at least 75% of its recent matches, that behavior is no longer coincidence. It's a predictive signal. And in betting, signals mean opportunity. Quick start. The 3-step starter strategy. If you're new to betting or overwhelmed by stats, here's a simple method to begin. It uses one market and simple tracking. No advanced metrics needed. Starter system. Use BTTS, both teams to score, as your single metric. Track the last 12 matches for each team, using free sites like SofaScore or FootyStats. Bet only if both teams hit the BTTS mark in 9 or more of those 12 matches. That's 75% or higher. That's it. No XG, no PPDA, no bankroll math, just clean pattern recognition. Once you're comfortable, you can expand into other markets such as over 2.5 or first half goals. But this gives you a winning edge right from day one. Understanding the 75% benchmark. Why 75%? Why not 90% or 50%? Because 75% is the sweet spot, strong enough to show reliable behavior, but common enough to capture meaningful data from a 10 to 12 match sample. Statistically relevant, 3 out of 4 matches confirm the trend. Balanced enough volume to analyze, without being overly strict. Actionable, high enough to give confidence, low enough to appear often. Many bettors chase 100% streaks, but those are rare and often unsustainable. Others trust 60% trends, which are too weak. 75% is the balance point. Example, if a team scores in both halves in 9 of its last 12 games, that's a signal, not luck. It's a rhythm, and rhythms can be profitable. On the flip side, if a pattern shows up in only 5 or 6 of 12 games, it's unstable noise, not worth staking your bankroll on. Real example, Manchester City, edge percentages. Edge example, in the ebook, you'll see a chart from the Winning Edge 75 app tracking Manchester City between April 2024 and April 2025. The app calculates edge percentage as occurrences, 12 games. It also checks whether the behavior appeared in the last 2 matches, confirming that the trend is active now. Metrics tracked include over 3.5 goals, second half, over 1.5, score in both halves, both teams to score. This is how you bring the 75% principle to life. Identify patterns that meet or exceed 75%. Confirm recent consistency. Execute bets aligned with behavior, not hype. Behavior, not just outcomes. Casual bettors look at final scores. Strategic bettors ask deeper questions. Did the team score first? Did they dominate the second half? Do they regularly concede late? Are they consistent with both teams to score? When these behaviors repeat at or above 75%, they move from random to predictable, and that's where the edge lies. Filtering the noise. Trends at 50% or 60% are coin flips. The 75% principle filters them out. Examples from 12-match samples. Team A scored in both halves in 9 of 12, 75%. Team B drew the first half in 10 of 12, 83%. Team C won 2-0 in 7 of 12, 58%. Interpretation. Team A and B show repeatable, high-confidence behavior. Team C doesn't. The filter saves you from staking on weak signals. From data to strategy. The 75% principle isn't just theory, it's how you build structured probability-based bets. Example. With Manchester City's 12-match breakdown in the Winning Edge system, calculate edge percentages across metrics. Identify which metrics hit consistently. Check recent matches for validation. Combine trends into singles, doubles, or system bets like Yankees or Heinz. The flow is simple. Option. Use the 75% filter. Verify recent behavior. Stack bets logically. This isn't hope. It's probability in action. Workflow. From trend to execution. The ebook contains a flowchart showing how the system works, step by step. In summary, collect and filter metric data. Validate trends across 12 games. Confirm recent behavior. Trigger the bet when both checks align. That's the Winning Edge process, clean, repeatable, and disciplined. Why? The 75% principle works. Sports betting is chaotic, but not random. Within that chaos, teams repeat behaviors. The 75% principle is designed to catch them. Here's why it works. Eliminates guesswork. You bet based on repetition, not gut. Strips away reputation. Big or small clubs, only trends matter. Uncovers hidden value in lesser-known leagues. Prioritizes process over one-off results. Applies across all markets, goals, corners, cards, halves. Remember, when emotion goes up, logic goes down. The 75% principle puts logic back in control. Key takeaways. 75% is the entry point to predictability. Use 12-match samples for reliable patterns. Avoid overfitting to one result. Trends need volume. Confirm with the last 2 matches for live validation. Stack only statistically solid metrics. Chapter summary. The system starts here. The 75% principle is not just a number, it's the foundation of winning-edge betting intelligence. You're no longer betting on teams because of bias, brand, or hype. You're betting on patterns, behaviors, and probabilities. And you only act when the data aligns. End of chapter. Chapter 5. The repeating behavior principle. Soccer is often described as unpredictable. Yes, upsets happen, but most teams actually operate within consistent behavioral patterns. These are not random flukes, they are statistical fingerprints that repeat under similar conditions. The repeating behavior principle is about spotting and leveraging those patterns. Example: if a team fails to score away from home in 7 of their last 10 games, or if they always start strong but fade late, that's not luck, that's repeatable behavior. And in strategic betting, repeatable behaviors create your edge. This principle asks you to move beyond emotions and short-term form, and instead observe how teams behave under specific, repeated conditions. Why teams repeat patterns? Repetition in football often comes from tactical, psychological, and environmental factors. Tactical setup. A coach's system, high pressing, deep defending, or counter-attacks rarely changes unless forced. Squad depth. Thin squads show recurring weaknesses due to fatigue, injuries, or lack of options. Mental response. Some teams repeatedly crumble under pressure, lose focus, or blow leads in big games. External triggers. Travel, altitude, hostile crowds, even pitch size can all create performance loops. Example: if a team concedes late goals in 6 of their last 8 away games after midweek fixtures, that's not random, it's a signal. This isn't about guessing, it's about spotting the rhythms others miss. From observation to opportunity. Here's how to turn repeating behavior into betting value. Spot it. Use data or apps to detect recurring patterns, like BTTS, first half draws, or over 3.5 goals. Quantify it. Does it appear in 75% or more of relevant games? Contextualize it. Will the upcoming match recreate those conditions? Venue, opponent style, fatigue. Align it. Bet only when repetition, conditions, and percentages all align. Example: a team hits over 1.5 first-half goals in 9 of their last 12 home matches against bottom-half teams. They now face a similar opponent with no major injuries. That's not hype, that's an edge. When you align repetition with the right context, data becomes value. You're not betting on emotion, you're betting on evidence. Patterns versus hype, a new way to think. Form is temporary. Behavior is structural. The public chases recent results. Strategic bettors study how those results were produced. If the behavior is repeatable and meets the 75% benchmark, it's worth your stake. Don't ask, is this team hot? Instead ask, are their metrics consistent in repeated scenarios? That's the mindset shift. Think like a system builder, not a form chaser. Key takeaways. Teams often move in predictable cycles. Find them. Focus on behaviors that repeat in similar contexts, home versus top 6, or away versus weaker sides. Use the 75% threshold to separate real patterns from noise. Bet only when trend, plus conditions, plus opponent align. Combine behavioral data with tactical awareness for elite-level betting. Chapter summary. Data is rhythm, not randomness. Most bettors react, you forecast. While the market gets distracted by short-term form, you'll be reading deeper. Which habits always repeat? Which weaknesses always resurface? Which conditions trigger the same outcome? That's the repeating behavior principle. Spot the cycles, filter the noise, bet where others aren't even looking. End of chapter. Part 2. Building Analytical Intelligence. Developing the tools to see what most bettors miss. With the right mindset in place, it's time to upgrade your analytical skill set. This section walks you through the systems that elite bettors use to read the game beneath the game. Here, you'll learn which metrics truly matter and how to avoid stat overload. How to profile teams by tactical identity, statistical footprints, and mental behavior. Why risk management isn't optional, it's your betting oxygen supply. And how to structure your slips using multi-line systems like the Yankee, Hines, and Goliath. This is where raw stats become insights, and insights become repeatable edge. Now, let's begin with Chapter 6, Metrics That Matter, Building Your Betting Intelligence. Chapter 6, Metrics That Matter, Building Your Betting Intelligence. Every bettor wants to win, but only a few know why they win or why they lose. The difference comes down to metrics. Metrics aren't just numbers, they're the language of probability, the compass that separates casual guessing from precision betting. And in this chapter, I'll walk you through the key metrics that matter most, so you can start replacing instincts with intelligent analysis. What are betting metrics? A betting metric is any measurable data point that helps us judge a team's strength or the likely outcome of a match. The best ones share 3 traits. They're predictive, they're consistent over time, and they help us spot gaps between performance and market perception. Like the saying goes, if you can measure it, you can manage it, and in betting, if you can manage it, you can win. Core metrics. Every bettor should track them. Let's start with the essentials. First, expected goals, or XG. This measures the quality of scoring chances. It tells us whether a team was lucky, clinical, or truly dominant. For example, Team A might win 2-0 with an XG of just 0.7. Team B could lose 1-2, but record an XG of 2.1. The scoreline says one thing, but the metric tells us Team B was the stronger side. Second, possession versus effective possession. Not all possession matters. What you want to track is who dominates the attacking third, not just who passes the ball around aimlessly in their own half. Third, shot creation actions, or SCA. This looks at how often a team builds real attacking movements. Pair it with XG, and you see not only if a team gets shots, but whether they are consistently dangerous. Form metrics over time. Dan. At Winning Edge 75, our benchmark is always a 12-game sample. Why? Because 3 to 5 matches is too noisy. 12 gives you a statistically significant window. We track last 12 matches overall, last 12 against top half teams, last 12 away or on short rest. This is how we separate temporary form from true behavior. Betting intelligence isn't about knowing a team won. It's about knowing why they keep performing the way they do and whether that trend is sustainable. Situational metrics. What most bettors miss. Here's where elite bettors stand apart. They don't just look at scores, they look at game states. Leading 1-0, how often do they hold the lead? Losing at halftime, how often do they fight back? Playing their third game in 7 days. Does fatigue show in their pressing or error rates? These aren't bonus stats. These are difference makers. Blending metrics for deeper insights. On their own, metrics are powerful, but when you blend them, they tell deeper stories. XG plus SCA equals attacking efficiency. XGA plus save percent equals defensive trust. XG difference plus league position equals whether a team is outperforming or underperforming. For example, a team with high SCA but low XG creates lots of chances but can't finish. That's a clue to fade them in goal markets or back their opponent's defense. Red flag metrics. And then there are the danger signs. High goals scored but low XG, that's overperformance, it won't last. High possession but low SCA, that's empty control. Few fouls but many yellow cards, that's emotional indiscipline. The earlier you spot these, the earlier you can step away before the market catches on. Live metrics versus pre-match metrics. Strategic bettors marry pre-match data with live action. For example, if a team has a 75% trend of hitting over 1.5 second-half goals, and the score is 0-0 at halftime, that's your live trigger. Don't just react to the game, anticipate it with patterns already in motion. Key takeaways. So, let's wrap up this chapter. Metrics unlock clarity in a world of noise. You don't need to track everything, just what's predictive and consistent. Blend metrics to uncover deeper truths. And always ask, not just what does this stat say, but why does it matter? This is how you move from gut feeling to grounded analysis. Chapter summary. Metrics are your compass. The betting market is emotional. The public chases headlines and hype. Metrics are your compass. You don't need 100 stats. You need 10 powerful ones used correctly. In the next chapter, we'll take this further and learn how to profile teams so you can read beyond reputation and uncover their true predictive patterns. End of chapter. Chapter 7. Mastering team profiles. Reading between the numbers. Most bettors look at teams through reputation, league tables, or current form. But strategic bettors? They look beneath the badge. A true team profile doesn't just show wins and losses. It reveals the soul of a team, how they score, how they concede, and how they behave under pressure. In this chapter, we'll break down how to build team profiles, the way analysts and betting syndicates do, by studying styles, statistical footprints, and tactical tendencies. What is a team profile? Think of a team profile as a 360-degree view. It tells you how they score and concede, what phases of a match they dominate, their emotional triggers, and their behavior under different game states. Like a player card in a video game, every team has attributes, and if you know how to read them, they become predictable. Foundations of a team profile. You start with 3 key building blocks. 1. Tactical identity. Are they possession-based or counter-attacking? Do they press high or sit deep? Do they attack wide or cut through the middle? 2. Managerial influence. Managers leave fingerprints. A high-press Bundesliga coach will often produce teams that score late, as pressing wears opponents down. A defensive La Liga coach will lock down after scoring. And in the Eredivisie, attacking managers often start fast but struggle to hold leads. These aren't just styles, they're betting signals. 3. Game state behavior. How does the team react when leading or chasing the game? Do they collapse after conceding, or are they second-half specialists? Statistical footprints of playing styles. Teams leave data trails that reflect their identity. Possession sides. High pass accuracy, high possession, low XGA. direct counters, fewer passes, more long balls, and progressive runs. High press, low PPDA, lots of turnovers in the opponent's half. Low block, few shots conceded, but dangerous XG when they break. Over time, these markers confirm whether a team's identity is stable or shifting. Mental profiles. Numbers don't capture everything. Some edges are psychological. How often do they come back after conceding? Do they rise against top teams or collapse? Are they disciplined or card-prone? Do they thrive away from home or crumble? Strategic betting isn't just about how they play, it's about how they react. Contextual profiling, the situational advantage. Even the most consistent teams behave differently in different contexts. Contextual profiling is about spotting those shifts. Home crowds lift teams into more aggressive attacking, play higher, XG, more corners, more BTTS. Travel fatigue, after midweek, trips reduces, pressing and sprint intensity, often leading to late goals conceded. European weeks bring rotation, giving underdogs more value. Derbies and rivalries. Stats go out the window. Matches become emotional, volatile, and high variance. That's why we use tools like a Derby Performance Index, which shows goals, cards, fouls, and lead changes spike sharply in rivalry matches. For bettors, this means value in overs, cards, and comeback markets. Advanced profiling, pattern recognition. Once you've built several profiles, start matching them. Does one team's strength hit the other's weakness? Does a slow starter face another slow starter making 0-0 halftime value? Does a team that struggles against high presses face one of the best pressing sides in the league? This is where profiling turns into strategy. Tactical filters. When to question the trend. Of course, no profile is bulletproof. Sometimes you need filters to know when to pause. A new manager in the last 3 games. A missing star striker or goalkeeper. A sudden formation change. Red cards or heavy fixture congestion. If 2 or more of these filters are active, tread carefully. Delay entry, reduce your stake, or just observe another week. These filters don't replace the 75% rule, they protect it. Key takeaways. So let's recap. Team profiles are the DNA of how a side behaves. Don't just track stats, study style, psychology, and context. Match profiles against each other to spot tactical mismatches. Update them weekly, because teams evolve. And always track the manager's habits. Behavior often runs deeper than just the squad. Chapter summary. Decode the team to predict the match. Team profiles move you from betting on names to betting on patterns. The badge doesn't matter. The reputation doesn't matter. What matters is behavior. Once you learn to decode a team's DNA, you stop reacting and start anticipating outcomes before the market sees them. End of chapter. Chapter 8. Risk management in soccer betting. Most bettors don't fail because they misread the game. They fail because they mismanage their money. Strategic betting isn't just about finding winners. It's about surviving losing streaks, protecting your bankroll, and executing a plan with discipline. In this chapter, we're going to build the risk management system that separates gamblers from investors. What is risk management in betting? Risk management is simply how you control how much you bet, how you handle losses, and how you survive bad runs. It's not a side note. It's the engine that powers long-term success. Without it, even the best edge will collapse. The 5 pillars of risk control. 1. Bankroll management. Treat your bankroll like business capital. Never risk more than 1 to 5% of it on a single bet. Example: if your bankroll is $1,000, That means a $10 to $50 stake range, no exceptions. Segment your bankroll to 70% for predictable league games, 20% for higher variance cup matches, 10% for experiments. This structure limits exposure and keeps you disciplined. 2. Stake sizing models. This is about consistency. Stake too much, and one bad streak wipes you out. Stake too little, and your edge never compounds. Pick one model and stick to it. Flat staking. Same amount every bet, great for beginners. Percentage staking. A fixed percentage of your bankroll adapts as you win or lose. Kelly criterion. An advanced model that sizes stakes based on your estimated probability edge. But remember, if your win probability estimates are off, Kelly can be dangerous. A simpler approach is confidence-based scaling. For example, at 75 to 79% confidence, to stake 1%. At 80 to 84%, to stake 2 to 3%. At 85 to 89%, to 4 to 5%. At 90% plus to you, can push 6%, but only if live conditions confirm the pre-match edge. Never go above 6%. Protection comes first. 3. Loss control. Never chase. A loss doesn't mean doubling your stake next time. Instead, ask yourself, did I follow my process? Was my stake within limits? Was the loss just normal variance? Losses are feedback, not failure. 4. Managing emotional drawdowns. Even professionals lose 40 to 45% of the time. Variance is natural. That's why a betting journal is key. Record your selection, stake, outcome, and lessons. This turns chaos into clarity. 5. Risk mindset. This is the difference between a gambler and an investor. Gamblers double down after a loss. Investors stick to their system. Gamblers bet with emotion. Investors think in units. Gamblers chase fast wins. Investors play for long-term ROI. The statistical impact of risk management. With risk control, volatility drops, bankrolls last, and your edge has space to play out over 50, 100, or 200 bets. Here's the truth. At a 55% win rate, with 2.0 odds, you're profitable, but only if you avoid emotional betting and stay consistent with your stake model. The psychological benefits of structure. Structure creates peace of mind. Journals and reviews create constant improvement. Stake discipline removes emotional swings. And consistency builds confidence, even through losing streaks. Key takeaways. So, let's lock this in. Never risk more than 5% of your bankroll per bet. Pick one stake model and stay consistent. Don't chase losses, review them. Track everything. And above all, think like a portfolio manager, not a punter. Chapter summary. Bankroll is survival, not ammunition. You can have the best system in the world, but without risk control, you'll still go broke. Betting isn't about how much you win today. It's about how long you can stay in the game while your edge plays out. Protect your capital, scale your risk by confidence, and always operate with the mindset of an investor. End of chapter. Chapter 9. Popular betting systems. Goliath, Heinz, Yankee, and more. In the last chapter, we learned how to profile teams, tactical, psychological, and statistical. But identifying strong metrics is only half the equation. The next step is execution. Once you know which teams give you the edge, you need a structured way to place your bets with consistency and discipline. That's where betting systems come in. Multi-line betting structures like the Yankee, the Heinz, or the Goliath let you turn individual signals into scalable strategies. They spread risk, stack probability, and give you multiple ways to win. Let's break them down. What are multi-line betting systems? A multi-line system is a bet made up of combinations, doubles, trebles, and accumulators. The benefits? Multiple paths to profit. Protection if one leg loses. Smarter bankroll planning. Perfect fit for high percentage metrics like our 75% rule. Core betting systems. 1. The Yankee. 4 selections, 6 doubles, 4 trebles, and 1 fourfold 11 bets in total. Best used when you have 4 solid data-backed picks from different leagues with 75% or higher edge metrics. 2. The Hines. 6 selections, 57 bets covering everything from doubles to 6-fold accumulators. This is for broader confidence, where you've got 6 picks showing 65 to 75% consistency. 3. The Super Hines. 7 selections, 120 bets, high coverage, but much bigger exposure. Best reserved for strong, correlated setups, like systems built around goal markets. 4. The Goliath. 8 selections, 247 bets. This is the monster. Maximum coverage, maximum cost. Only for large bankrolls, and when you have consistent metrics of 70% or more across all picks. Remember, Goliath is not for casual use. It's a professional structure. 5. Custom multi-selection systems. Not all systems come with names. Many pros use flexible structures like 8 out of 10, 13 out of 14, or 10 out of 15. The principle is simple. Pick a large set of high-confidence selections, and the system is built to profit if a certain minimum number hit. For example, in an 8-10 system, you profit if at least 8 of your 10 picks land. In a 13, 14, or 10, 15, you can afford 1 or 2 misses and still clear profit. The benefits? Room for error, customizable across markets, BTTS, over 2.5. Easy to journal, 14 out of 15. Still netted Rone. But here's the key. Balance your odds. Too many low odds picks weaken the structure, and your profit margins collapse. How systems fit with the 75% method. To maximize these systems, use 12 match samples for validation. Only include picks with 75% or higher edge percentages. Mix bet types, but always verify context. Don't stack teams based only on reputation or league tables. The system only works if every selection is built on hard data. Why use betting systems? Systems help you spread risk, profit, even when 1 or 2 picks fail. Avoid emotional all-in bets. Treat betting like a portfolio, not a lottery, and let probability compound over time, not emotion. ROI example. The Yankee. Here's a quick simulation. 4 selections, 11 bets total. At a 55% hit rate and average odds of 2.1, the theoretical ROI per selection is 15.5%. But in practice, because of the system structure, the net Yankee ROI balances out to about 7.4%. That means, over 500 Yankee systems, you'd expect a profit rate of nearly double your stake. Even at just 55% win rate. The lesson: structured systems turn modest statistical edges into repeatable profit. System choice guide. So which system fits you? Yankee. Best for beginners. Small bankroll, 4 strong picks. Hines. Medium bankroll, 6 solid picks. Moderate edge, Super Hines. High risk, high reward, only when your edge is strong. Goliath. Professional level bankrolls. 8 picks. Strong consistency, custom systems. Flexible. Perfect when you've got 10 to 15 data-backed teams. Important warning. Systems with hundreds of lines, like Goliath, require emotional discipline and bankroll depth. If you're betting them just to stay active, you're not managing risk, you're burning capital. Systems plus metrics. Strategy. Here's an example, Yankee. Team A, 70% win rate at home. Team B, 80% BTTS across last 12 games. Team C, 75%, over 3.5 goals. Team D, 66%. First half draw rate. This is not random. It's structure built on repeatable probability, and that's what creates long-term consistency. Key takeaways. Lock this in. Betting systems are execution frameworks, not shortcuts. They amplify your edge, they don't replace it. Always link picks to metrics, not emotion. Scale your bankroll properly. 57 lines means 57 units. Treat your slip like a portfolio, not a lottery ticket. Chapter summary. Structure beats chaos. Betting systems aren't get-rich schemes. They're frameworks for discipline. When combined with the 75% principle and bankroll control, they transform scattered bets into tactical portfolios. Remember this. Bet smarter. Bet with structure. Bet with systems. End of chapter.